Hello and welcome to the channel. In today's video we will talk about the credit score, what it is and how it is calculated. So as a credit counselor will tell you, your credit score is really important. It is like a financial ID number. The lower the score, the less desirable of a customer you are and the worse credit terms you will get every time you wish to get credit from a bank, credit card company and so on. So by contrast, the higher your score, the more desirable of a customer you are and the better credit terms you will get every time you wish to get credit. This can save you thousands, if not millions of dollars during your lifetime because it will be offering the lowest interest rates on things like your mortgage, car loans and more. While there are some aspects of credit score calculations that are kept secret, we can guess at 5 of the main components used by Fair Isaac Corporation to arrive at your FICO score. You can find their website in the description link below this video. It can be really handy and it can have really important information if you want to dig deeper into this topic. Now let's talk about the credit score basics. So credit scores range from 300 to 850, while the lower numbers, the worse it gets, and the higher, the best. The 5 components are, first of all, we have payment history, which is 35%. Second in the list is amounts owed, 30%. The third is length of credit history, 15%. The fourth, new credit, 10%. And lastly, the types of credit, which is 10%. What about the payment history? Let's just take it one by one. First of all, we have the payment history, which is 35%. This reflects whether or not you make your payments on time. So the more current the information, the more it will count towards your credit score. Therefore, being 90 days late right now is worse than having 90 days late last year. As you can see from this percentage, you actually never want to be late with any payment on your credit cards, loans and so on. If you want to get a good credit score, it's best to avoid being late. It damages your score basically and it will usually have to pay a stiff penalty as well. Often this is around $35 to $39 as a late fee with many credit card companies. Second of all, we have the amounts owed, 30%. So this criteria is mainly related to your credit utilization. So how much of the credit available to you in your current accounts that you are currently using. So the less the better. You should also try to make sure that your credit to debt ratio is never more than 50% overall. So in other words, if you have an overall line of credit of $10,000, you should have no more than $5,000 on the cards. The sooner you bring down those balances, the sooner your credit score can start to go up. Third on the list, we have length of credit history, 15%. So the longer your credit history length, the better. For example, having an account for several years has more of a positive impact than having an account for only 6 months. The fourth on the list is new credit, 10%. So what percentage of your accounts are new accounts, less than a year old? Requesting a lot of new credit cards, for example, sends up red flags and lowers your score because your credit report is marked each time you request credit. The only exceptions in this case is if you are shopping around for a car lease or a mortgage. In this case, do all your fact findings within a month, so it counts as only one query rather than several. The fifth on the list is the types of credit, 10%. So it helps your credit score if you have a variety of types of credit. For example, a mortgage, a car loan, and a credit card are all really good types of credit, really good for your report as well than 3 credit cards. For example, you can actually have 3 credit scores, one from each of the 3 major credit Buruni's, TransUnion, and Experian, for example, and banks and other lending institutions that will use one of these three types when investigating how creditworthy you are. So I will include the main links in the description box below for you to investigate further. So a decent credit score from your bank's perspective is about 720 in most cases. So assuming that you want a credit score of at least 750 for most purposes, the closer you get to 850, the better. We've come towards the end of our video today. If you found this video helpful in any way, subscribe and like. We'd love to have you on board. Take care, and I'll see you in the next video.